everyone. I am Taira Cran with EXP Realty. I'm a licensed realtor here in Hawaii, and I have Jessica Hyman here with me as well. Jessica, do you want to introduce yourself?
Sure. My name is Jessica Hyman, and I work with Academy Mortgage, and I'm licensed in Hawaii and California.
Awesome. Okay, well, we're going to go ahead and start this presentation on 5 steps to purchase a home. We're going to simplify these steps as easy as possible for you all, mostly cater to the first-time home buyer, but also if you have purchased a home before, this might be a great refresher for you as well. So I'm going to go ahead and start this off. And then, okay, so 5 steps to purchasing a home. The first step, well, a little bit about us, right? Jessica Hyman is a loan officer, and so she is licensed to do all things financing and numbers. And then I am your legal representation for your contract, writing your contracts, taking you to go shopping, and everything that has to do with submitting an offer and closing and getting your keys. Did you want to chime in at all, Jessica?
Yeah, no, I think that's it. I think it's important to remember the two work very closely together. So it's important that when you are finding both your realtor and your loan originator that's going to be doing that, that you know that they're comfortable working together. That really makes the process smoother.
Awesome. Okay. So first step is you're going to get pre-approved, partner with a local lender, just as like Jessica, and you find your financial comfort zone. So Jessica, you want to kind of take us
Yeah,
through?
for sure. So getting pre-approved is absolutely the first step to buying a home, and it's because you need to know what you can afford. There's no sense in torturing yourself and looking at dream homes when you can't afford it. And so that is the role of the lender. And you want to make sure that you're comfortable working with this person, because we go into all the nitty-gritty about your finances and also other very personal matters in order to make sure that you're going to get the best service and that we're going to be able to reach those goals. So you really want to make sure that you are comfortable with who you work with.
Okay, awesome.
Yeah. And so we're going to go into that process a little bit. The very first thing, absolutely, it starts with a conversation. So if we are not meeting in person, we can meet over Zoom, FaceTime. We can simply have a phone call as well. But the conversation is going to be all about your goals. Overarching, this is where we're going. What are your home buying goals? I'm in the interest of keeping my customers and working closely with them. So I want to know what your short-term and your long-term goals are. It's not just about this one purchase, it's about your future purchases and how I can make sure that I'm setting you up for success if using real estate is a wealth strategy for you. So to get to those goals, we're also going to be talking about your timeline. When do you want to buy? We're going to talk about your family a little bit. It's a lot different if you're a single person buying for yourself or if you have 3 kids and a dog. We're going to talk about your credit and credit history. Not everybody knows the answers to those questions, but we will go into it a little bit. But you should know something about your debt. You don't have to know numbers, but do you have credit card payments that you're making each month, car payments, student loans, those sorts of things. So we'll begin there. We're going to go into your work history, and that is probably the most important thing that we're going to be covering, because my role as a lender is to make sure that your income is consistent and that it's going to continue, and that makes you a more viable lender. So we will talk about any lapses in employment. They may be from maternity leave or injury, or maybe you just, whatever, you took a break, you needed some time off. So we're going to talk about all of those, and none of those are reasons why you wouldn't be able to get a loan, but we just need to know all of them. So again, that goes back to the relationship with your lender. If you're not comfortable speaking about all of these different things that happen in life with the person who is lending you money, then it's going to be a little bit more difficult. So, and then lastly, we're going to talk about your comfortable monthly payment. If you qualify for $1 million loan, cool. But if you don't want to pay the mortgage on $1 million loan, then we're going to bring it back down a little bit because we want to make sure that you're saving for retirement or whatever it might be. So we'll talk about that monthly payment, which will include homeowners insurance, your mortgage, and an HOA if that's applicable. So that's the conversation part. Then comes the paperwork and the action. So in order to confirm that your employment will be consistent and continue, I need to look at your history. So you're going to send me 2 years of tax returns, and those include W-2s if you're a W-2 worker. If you're self-employed, I need to see personal and business taxes, and we go even deeper. If you are receiving pay stubs because you're a W-2 employee, for example, we're going to see 30 days of pay stubs. We need 2 months of your bank statements and asset statements. We need to see where that income is going once you receive it and what banks you're using or what accounts you're using to pay those credit card bills and student loans and everything like that. So we're creating a trail of where your money comes from and where it goes. I need to see your photo ID. And then if you currently own a property, then we'll need documentation on those as well. And then last but not least, you complete an application. It's all online. It doesn't take more than about 15 minutes to complete. But when you do that application, it allows me to then go pull credit and see what's going on there. And it just is that next step in the process. So pretty straightforward. But again, I always like to tell people to mentally prepare for this process because it's a lot. And if you are not comfortable downloading bank statements, then we should start practicing because your life is going to be a lot easier downloading them rather than going to the bank. And if, for example, you're pre-approved today, but you don't buy for 3 months, then we're going to need to update all of those pay stubs and bank statements and everything like that. So remember that part about the relationship, and I'm going to be calling you and asking you for a lot of these things. So I want you to like me and not be frustrated every time I call. So that pretty much sums up that one. Ty, if you want to go to the next slide. So this next one is just some common hurdles. We have done so many loans and there is nothing we haven't seen, and we can get over any of these problems. And I won't go into each and every single one. I realize some of these are maybe not applicable to everyone. Probably the most difficult one is income, right? So not everyone can just go ask for a raise and make more money or change positions or change companies. I know that's a big deal. So that's a big one. But maybe we could get a co-signer. Maybe a family member is willing to be a part of the loan process with you, and we can use their qualifying income as well. So credit and debt, don't let credit scare you. We can always improve credit. There's credit repair companies we can work with. We can strategically pay down debt. And I'm going to say this, and I want everyone to listen up. If you have debt and you want to buy a house, don't go paying off all your debt before you get pre-approved. You do not have to pay down all your debt. And in some cases, it can take away from your opportunity to buy because you're taking money that may be part of a down payment or to buy down points on your interest rate. So don't pay down debt before you talk to me first, okay? And then on the down payment side, if we're blessed to have some assistance from family, that's great. There's ways to borrow from retirement strategically, and I can connect you with a great financial advisor who can help you understand how that will not negatively affect your retirement future. And then side hustle. Last thing I want to say, you notice side hustle is in the down payment side and not income. If you have a side hustle or a second job and you're earning money, save that money, put it in a high yield savings account, put it in a CD, something where it's going to grow, and then think of that as part of your down payment. If you have a second job, we need to see 2 years of your of taxes for that job in order to include it as income. we're taking your primary income from, or your primary job, we're using that income, and your second job needs to have 2 years or more. Okay. So just know that your situation is unique to you. And until you call and start asking and we start digging into this process, you won't know where you stand. And then once you have that pre-approval number, then Taira can start showing you houses that are in your price range, and you'll know exactly what you can afford. And it's not going to be a pipe dream, it's going to be real. So it's a tedious process, but you have to do it. It's the key to getting a home. So I would say that kind of sums up my part of this pre-approval process, Ty.
Okay, awesome. I'm going to go ahead and go to the next slide. So, right, the first step is the pre-approval process. And, once we get that pre-approval, Jessica Hyman will give me a pre-approval letter stating, such and such is approved at 700,000. That's kind of our max budget. That's our ticket to go shopping. So we go and look at homes, see what you like, we'll see what you don't like. And then once you find a home that you do like, we'll go ahead and what we do is submit an offer. So there's so many ways that we can write up an offer. It really depends on each situation. Each home is different. So, and then that's why you have me. I pretty much hold your hand. We write up a strong offer, and then once we get accepted, we open escrow. So opening escrow, it really doesn't mean that you are going to get this home and you're going to close on this home. It's actually just opening up that doorway to see if you even want to buy the home, because there's so many steps in the escrow process, which determines, if this is the right home for you, because you'll have a whole bunch of inspections. And I'll go ahead and go through that on the next slide. But, escrow is an overwhelming process in itself. And I'm here to hold your hand, and I work with a transaction coordinator to get us through escrow and get us to. And so I am, one moment. I go to the next slide. So in the escrow process, what we're going to see is it's a home inspection, which actually shows you what all the homes.
We're lost already. We're 20 minutes late. Jeez.
I know, Kevin.
Oh shit! Oh, you can hear us. Oh, sorry. How do you mute this? Sorry.
Kevin's actually my classmate. So once we open escrow, we do the escrow process. So these are the 4 actual major home inspections, and some are mandatory and some are optional. So I'm going to walk you through that. And this actually takes us through the steps of, like, even if you want to buy the home, right? So one is the home inspection, which a contractor or just a home inspection or a home inspector will come inside your home or inside the home that you want to purchase. They'll turn on all the lights, all the switches. They'll see if there's any cracks in the foundations, seeing if the electrical works. And because of this is our legal way of actually opting out of the contract. If there was, you put an offer on the home over asking, and then we find in the home inspection there's a huge crack in the foundation and it's going to cost $30,000. Well, this is our time to go back to the table and tell the seller, like, hey, we didn't anticipate buying this home with a huge crack in the foundation. Can you credit us $30,000 in order to buy this home to close, and then we can fix the foundation? So a home inspection is optional. You don't have to do it, but it does protect you as a buyer to see what is wrong with the home. And then 2, depending on the type of loan that you qualify for, a termite inspection might be mandatory from the lender. Sometimes it's not. So, but termites here in Hawaii, it's a common thing. I do recommend, when I do write up offers, if we want to come in with a strong offer, is to not do the termite inspection. It's because typically when you get a home, you just do it, like, you know, you should tent your home. If you have a home in Hawaii, you should tent it every year or so, you know, because we do have termites. And it's just something that we are all accompanied to. But sometimes it's mandatory, sometimes it's optional. So it just depends on, you know, your loan package, what you qualify for. And then 3, an appraisal is going to come in, and this is kind of on Jessica's end on the lending side, because the bank wants to make sure that the home is valued at the price, or at least around the price that you know, are lending on, I guess. So I don't know, you can maybe talk on that, Jessica.
Yeah,
And
I was going to say that sometimes people confuse the home inspection with the appraisal. Home inspection happens pretty quickly after an accepted contract. Appraisal will happen a little bit later, usually a week or 2 into the process, depends on our closing timeline. But the appraiser is going to go out and they're going to confirm that they're going to confirm the value of the home, and they're going to use historical sales in the area to confirm what its worth might be. And then they're also going to look for things, you know, if the seller is selling it as a 2-unit property, but they go out and they say, no, this is legally only a single unit home. That means that we're going to go back to Taira, and Taira is going to be doing some negotiations to say, hey, this isn't exactly right, or whatever it might be. And that appraisal process is important. And just to add the last contract that me and Taira worked on together, she negotiated a price that was well below asking, and it was accepted. And when we got the appraisal back, I think it was like $18,000 or $20,000 more than they paid for the home. So immediately they got $20,000 in equity because they paid $20,000 less than what the home was valued at. So the appraisals, it's important.
yeah, and then that is typically mandatory, right? And the lender pays for that.
Yes, sometimes we'll get an exception. We see that more often, maybe in condos or something like that, where there's been a lot of sales and units are a similar floor plan and that sort of thing. So sometimes it's waived.
Nice. Okay.
Yeah.
And then the 4th one, and this is staking and survey. This is typically for land or single family home, just like, you know, not outside of a condo. And staking and survey, actually, you know, we hire a survey to get out there and pretty much stake the property, put pins on each corner, and then you can find your boundary lines and also setbacks, you know, because if you're like near a highway, you're going to have a setback in order to actually build your driveway or your gate. So that is one thing that is optional. You don't necessarily have to, but there is a risk, you know, on encroachment. If you don't do it, you know, if there's a neighbor that built a fence and it's encroaching in your yard, this is where the staking and survey will actually show that, you know, or vice versa, if you're encroaching on someone else's. So there's a lot of legalities for sure if you wanted to waive this, but that's just one of the 4 major inspections once you open the escrow process. And typically, I mean, all of these, you know, are negotiable when you write up a contract. The home inspection, typically the buyer will purchase the home inspection, and depending on the square footage, it could be from $200 to $600, you know, dollars to do that home inspection. And then, you know, termite, typically it's the seller, but sometimes, you know, the buyer will offer to pay it just to come in with a strong offer. And then the same thing as staking and survey. So cool.
Yeah, the only thing I would add is that the escrow process, we usually, I would say on average in Hawaii, close in 30 days. In California, it is a little bit quicker, but it can be anywhere from 30 days, 45 days, 60 days to go through the whole escrow and closing process.
Yeah. And then, so once we go to escrow, pretty much, and we go through all those benchmarks, and, you know, there's so many other processes in the escrow process, but, you know, as a first-time home buyer, we don't want to overwhelm you as well. And that's why you have us. I'm typically pretty much representing you, you know, I'm your lawyer. I'm going to, you know, going to bat for you pretty much. And if anything happens, I am, liable. So that's the one good thing about getting an agent to represent you. And then, Jessica is here to do all the financing and get all the lending. And so we are your main, two components on getting to purchasing a home. So, first step, pre-approval, that's the most basic step, right? And then once you get pre-approval, we go shopping, we get keys, and then we pretty much go through open escrow, and then we close and we pauhana. Anyways, so Kiana and Kevin, so are you guys first-time home buyers or?
Hi, aloha. Yeah, first time home buyer. My husband, he owns a house, but that is under his parents' trust. So I believe something about it's not completely ours. But it would be my first time home buying. I worked for Hawaii Life for a little bit as a TM, so I'm a little bit familiar with the process, but it's always nice to refresh and kind of, just refresh the steps. That way we can be prepared and we can continue to save for the down payment and maintain steady income. So thank you for the information.
Right on.
Yeah.
Did you have any questions that came up while watching?
No questions. No, that was informative. Thank you.
Taira, I had 2 questions that came in through Instagram when I took a poll. So one of the questions was, do you really need 2 years at the same job, or is that a myth? And if it is your primary position, you don't necessarily need 2 years at that job. 12 months or more is the best, but basically we want to see continued employment. So if you make a full career change, you go from working in the service industry to being an admin assistant or something like that, we just want to see that you're going to be working. And then we have different thresholds that we need to meet in order to confirm that income is going to be consistent and will continue. So you don't have to have 2 years at the same job, but generally 12 months or more is best. And then again, we talked about having that second job or side hustle. That second job would need to have 2 years or more if you're counting it towards income. So I hope that answers that question. And then another question that came through that you could probably answer first, and then I'll answer, Taira, was, what's something buyers are always surprised by about the process?
Their affordability, to be honest, and then also the credit score. People are like, oh my gosh, I have bad credit, like, oh my gosh. And then they don't know that there's loan packages out there that actually, the FHA, right, is fairly lower, for your credit score. And then just, it just depends, everybody can qualify for so many different loan packages out there. So I think that's the biggest thing is like, and then what they qualify for is like, whoa, I didn't know I can qualify for that much,
Totally.
But they just don't know. So I think that was like the first process is just getting pre-approved, seeing where, even if you are, I don't know, you know what I mean? Like you're not ready, I would say just do the pre-approval. Even if you want to go and buy in 2 years, at least you know what you need. Maybe it is your credit, and maybe it is more down payment or whatever that is, but you can at least fix it now. And then in order to get to, to
Absolutely.
buy.
And that's actually a really good point that to back up a little bit and then also support what you said is that if you don't know where you are right now, then you don't know where you're going to meet your goals. So we need to create a roadmap for you. If it's not today, but in however long you want to buy, we create that roadmap together. So we're going to look at your credit. We're going to see where you're at and all of that. So that's super important. And then to kind of back up a little bit when with the question about the 2 years, if you are self-employed, yes, we absolutely need 2 years. So I'm sorry, I forgot to mention that, but that is, you will need 2 years if you're self-employed.
Yeah.
So, and yeah, go ahead.
Okay, no, and then I was gonna say too, maybe, I mean, since Kiana and Kevin are here and they're first time home buyers, what are those loan packages out there that they could qualify for? What is, like just a general for like credit score, 0% down, fine,
Yeah. Yeah, I mean, it's a big question. Again, that goes back to that first part of the presentation. We were talking about the conversation and knowing what their goal is and what they're looking for. So I think just a real quick overview of different loan programs that you hear about. You hear about conventional, that's the most common. If you are a first-time home buyer, you only need to put 3% down of the purchase price. And then you should calculate 2% of the purchase price for closing costs. So let's say 5%. If you're going to go conventional, the better your credit score, the better your interest rate generally with that one. Then there's government-backed loans. So that would be a VA loan. If you've been in the service and you qualify for that, and you can put 0 down, but you still need closing costs for that, you will still be responsible for that 2% closing costs. And there's FHA loans where you can, the least you can put down is 3.5%. And then also closing costs. But with an FHA loan, because it's government backed, they want to throw you a bone, and you can have a lower credit score, and you can have a little bit more debt. So they sort of balance that out with other things. There's also USDA loans, which are government backed, and then also do not necessarily require they don't require a down payment. So.
And then, so what is for the FHA, what is the lowest credit score you can have?
It depends. Low 6s.
Okay.
So is usually it. And then
Yeah.
I see Kevin asks, what are the costs to work with a loan officer to just check the temperature, access? 0, it's nothing. So my job as a loan originator is to create that relationship and make you want to come back and work with me, but I have to earn your trust and I have to earn your business. So there is no obligation to work with me if you get pre-approved. And then also, just sort of as a legal side note, just because you get pre-approved, that's not a guarantee to lend. That's something that the legal people at my company like me to say. But yeah, no obligation, doesn't cost a thing. Just like if you were to call Taira and say, hey, I want to look at houses, I'm pre-approved, she'll set up a search for you, but that doesn't mean that you've signed a contract and you're working with her. So we have to earn your business.
Yeah, and the good thing about buying is typically the sellers, the seller's agents, the seller, sorry, I'm getting my words twisted. So typically the seller pays the seller's agent's commission and the buyer's agent's commission. So it's a great, there's no reason why you wouldn't want to get a realtor, because you get us pretty much for free. We represent you for free. So, and then just on the selling, when you go to sell a home, just remember you're going to have to pay the seller's agent's commission and then also the buyer's agent's commission. So that's just those are the typical costs. Again, there's some homes, the seller will say, I'm not paying an agent's commission. And sometimes that will come up. Typically it's really rare because it's not, yeah, and that's a whole nother thing too. But typically, yeah, you get us for free. And as an agent. And again, just like Jessica said, it's like you're kind of driving the car. It's really up to you. Like, not every realtor is the same, and you can kind of pick and choose who you want representing you. Some realtors will make you sign a contract. That could be a year contract. That could be a 6-month contract, binding you to them, because a lot of realtors will work so hard at finding people a home and then right at the last minute be like, oh, I'm going to go use my aunt or my sister or my, and so, and we only get paid off of what we sell. So we're commissioned agents. And so that is kind of one thing that you will see with some agents. I don't personally make other people sign a contract. If I am not, feel comfortable, or if I'm not doing you know, the work that needs to be done, I'm not going to be obligated. You're not going to be obligated to work with me, you know? So, and I leave that up, you know, to the client and who I'm representing. And, you know, if they want to walk away, I just tell people, you know, just at least give me that conversation and just at least tell me why. And then we
For
can
sure.
kind of break off that.
Yeah.
Yeah.
And also to say with a lender, oftentimes people will get pre-approved by multiple lenders. And the reason for that is that they want to know what everyone's rate is and they're shopping for rates. And that's acceptable. And then what I just encourage people to think about is ultimately, who do you want to work with relationship wise? Because you can always come back to me and say, hey, bank of whatever is offering me this rate. Can you match it? And then I can let you know, yes, I can, or we cannot. And that's a great rate. Go for it. So then to just kind of wrap up or maybe come back around, the way that I do get paid is when we close a loan. So my payment comes as part of the closing costs that we pay for, or that you pay for, I should say. That 2% I mentioned, and closing cost is covering the cost of doing the loan. It's paying for the cost of escrow for the work that they do. And then it includes all of the prepaid items that go into buying a house. And I'll maybe save that for another conversation. But so that's when I would ultimately get paid, is when we close a loan, and no obligation prior to that.
Cool.
Great.
Yeah, this is good questions. Did you guys have anything else that you guys can think of? I think being a first-time home buyer, so I actually got pre-approved in 2013, and I am kicking myself in the butt because I wish I would have bought then. But I just didn't know, right? You know, you're young and, you know, and it's like a daunting process. And at the time I wasn't there, you know, mentally, but I did qualify for the USDA loan, which is 0% down. And, you know, which is a great loan package. And if you guys, you know, your credit score, right, has to be a little bit higher. They're a little bit more strict, and I think has to be above the mid 600s.
Yeah, and USDA is one of those ones where if everything comes together, it's like, yes, but there's a lot of little things that we have to look into. So
yeah, so but though that's a great, you know, for 0% down, you know, 100% financing, that's great, you know, that's huge. You don't have to come out of pocket for, you know, putting a down
payment.
Yeah. So
yeah, that's a big one.
Yeah. And then, you know, at least you guys know now, and then that's maybe something that you can work, you know, up to, and, you know, a goal set, you know, and maybe getting your credit score higher. Even the FHA is really good too. I mean, 3%, 3.5% is low, you know.
For sure. Yeah, and I would just say, you know, my final point would be, if you don't start asking questions, then you're never going to know. It doesn't cost anything to ask questions. This is my job. This is what I'm here for. I do this because I like to do it. And I want to help people buy homes. I want to help families be able to stay close to families, and whatever the goal might be. And so just ask questions, or you'll never know.
Yeah. Yeah. So, and we're here to help, you know, and just giving value and, you know, whatever it might be. If you think it's a dumb question, don't feel, you know, that it is, because more questions, more
dumber.
Yeah,
basically.
Yeah, and you know what I mean. And I and just from experience, you know, I wish I would have asked more questions and got, you know, and we're talking to the right people, and I wasn't, you know. And then now I'm kind of backtracking, but it's okay, you know. I mean, you learn and then you grow, and now I'm here and helping people get into homes. So anyways, well, if you guys you know, don't have any other questions, and then maybe another question will come up down the road, feel free to ping us, text us, DM us, email us. You know, you can find all of my information on my Instagram. And then yeah,
can follow up from there.
Yeah. Sounds good. Well, thanks, Kiana and Kevin, for joining in. And yeah, let us know if you want to start the pre-approval process. We are here to help.
Right on. You're welcome.
Bye.